US stocks have continued to show their exceptionalism. We've had record highs yesterday amid global turmoil. What do you make of that?
Well, actually, the tech sector in the United States is one of the most geopolitically exposed sectors out there. About 60% of the revenue of tech comes from overseas. So one of the ways that we've been looking about geopolitical fragmentation is, can you really tilt your exposures within the tech sector to companies that buy in the United States, build in the U.S., sell in the United States, really to try to isolate some of that geopolitical risk that I think is very present in the tech sector in particular.
Nvidia and Schneider Electric, along with its subsidiary Shenzhen Powergas Tech, have launched a partnership aimed at creating state-of-the-art AI data center cooling systems. These switches' most recent designs, which are unique to Nvidia's high processing server, are distinguished by their scalability and energy efficiency. Since Nvidia's servers, which serve as the foundation for its AI chips, use a lot of energy, up to 132 kilowatts per rack, liquid cooling is a solution. Schneider Electric provides fluid cooling and power providing needed specifically for these deep learning centers, leveraging its infrastructure expertise and Nvidia technical advancements. In order to optimize data center performance, efficiency, and flexibility, it also offers new client reference designs for its accelerated computing clusters. Important cutting-edge AI application domains like engineering analysis, generative AI, and EDA will be satisfied by these designs, as demonstrated by its $3 billion supply agreement with Compass Data Centers. Schneider Electric's overarching policies for increasing energy management in data centers are completely aligned with this cooperation. The collaboration exemplifies the growing industrial trend of using AI to meet the rising energy needs of sophisticated computing architectures. In a significant step toward a sustainable and transformative future, Schneider and Nvidia have partnered to establish the mainstream usage of AI to operate data centers. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
First of all, the AI revolution, is it real? What inning are we in? What would you say?
Well, yes, it's real, but we're probably in the first 2 or 3 innings. And I think this is something a lot of people get wrong when they look at big technology innovations like this. We see ChatGPT, we see these sort of flashy end states that look like the whole thing, but it's really not. We're very much in the early innings. And when we look at the ways investors can get access to this, honestly, what we see is a lot of leaning into the largest, flashiest, most volatile tech names like Nvidia. There's nothing wrong with owning Nvidia, but the actual build out that's happening in AI is much less flashy. It's data centers, it's cooling, it's people who run wires underneath floors. That kind of work is where the real money is actually being spent. So when we look at something like AIS, the product that we're talking about today, the point here is not to trade AI, but to get a meaningful economic exposure to AI in your portfolio if you think that's where the future is really headed. So the products that we're building at VistaShares are really about building from the bottom up those folks in the economic food chain that are really going to benefit from this build out. So yes, it's very real, but it's going to happen a little bit slower than I think some people expect.
As the company continues to profit from the strong demand for AI servers and its growing partnership with Nvidia, Foxconn, formerly known as Han High Technology Group, reported a 20% increase in third-quarter revenue to 1.85 trillion new Taiwan dollars, $57.12 billion, setting a record for the quarter. The company's financial results demonstrate a strong performance driven by key businesses, including artificial intelligence and cloud infrastructure. Net profit for the third quarter was 49.3 billion new Taiwan dollars, $1.52 billion, a 14% increase over the same period last year. Operating profit increased 19% to 54.8 billion new Taiwan dollars. With a gross profit of 114.7 billion new Taiwan dollars, a 12% increase from the previous year, Foxconn's earnings per share increased to 3.55 new Taiwan dollars from 3.11 new Taiwan dollars the previous year. For Foxconn, the demand for AI servers has been particularly significant. During the first 9 months of 2024, sales of these products more than doubled. The company reported that the cloud and networking sector, which includes AI servers, generated 32% of total revenue in the third quarter, up from 29% in the previous quarter. Additionally, Foxconn reported strong monthly sales in October and November. Revenue in October hit a new high of 804.8 billion new Taiwan dollars, $25.20 billion, an 8.6% increase over October 2023. Revenue reached 672.6 billion new Taiwan dollars, $20.75 billion, the second highest monthly revenue in November, up 3.5% year over year. Foxconn anticipates a large increase in quarterly and annual operations for the fourth quarter of 2024, citing the traditional peak season and ongoing demand for AI servers as key factors. The company continues to diversify its revenue streams by making strategic investments in new technology and geographic expansion. In response to global supply chain concerns and potential tariffs on goods from China, Canada, and Mexico, Foxconn has expanded its production footprint globally. With new investments in Mexico, Vietnam, and the U.S., the company is rapidly expanding its manufacturing operations. The Wall Street Journal claims that Foxconn is also expanding its production of AI servers and plans to construct a large facility in Mexico to produce Nvidia's GB200 servers, which are expected to be exported in 2025. Foxconn is also attempting to diversify by entering the electric vehicle sector. During Han High Tech Day 2024, the company unveiled 2 new electric cars in an effort to establish a presence in the growing EV market: the Model U, a midi-sized electric bus, and the Model D, a multi-purpose utility vehicle. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video. There is no doubting that for anyone who purchased shares of this chipmaker 10 years ago, Nvidia has proven to be a life-changing investment. This is due to the fact that Nvidia's stock has produced impressive returns of nearly 26,800% over the last 10 years, greatly outpacing the S&P 500 index's 195% gains over that time. Long-term investors in Nvidia stock have benefited from a number of catalysts, including the expansion of the video game industry, the growing use of the company's graphics processing units, GPUs, in data centers, and new growth prospects in industries like digital twins and the automotive sector. With a market valuation of just under $3.4 trillion, Nvidia is now the second largest corporation in the world, thanks to a spectacular increase in its shares over the last 10 years. Given that the size of the global economy is predicted to reach $110 trillion this year, it seems unrealistic to expect Nvidia stock to repeat its astounding success over the next 10 years. A 35-fold increase in Nvidia's shares over the next 5 years would make the company larger than the world GDP, with that figure predicted to rise to about $140 trillion by 2029. Naturally, that is ridiculous. Investors should also be aware that it might not be the greatest idea to place a single bet in the hopes that it would change their life. However, given the enormous untapped revenue opportunity it is sitting on, Nvidia might still have more to offer investors in the long run, which is why it might find a place in a balanced portfolio. Let's examine Nvidia's possible drivers in more detail and see why adding this stock to your portfolio can prove to be a wise long-term investment. Nvidia executives highlighted the company's $1 trillion sales potential in its 2022 Investor Day presentation. $100 billion in gaming, $300 billion in the automotive sector, $150 billion in enterprise artificial intelligence, AI, software $150 billion in Omniverse enterprise software, $150 billion in enterprise chips and systems, and an additional $150 billion in hyperscale chips and systems comprise the company's breakdown of this opportunity. But in the last few years, that addressable opportunity appears to have expanded significantly. For example, Nvidia management currently believes that data center processors alone represent a $1 trillion revenue opportunity. This is because, in an effort to both boost processing capacity and lower electricity consumption, the chipmaker is now projecting a shift in data centers from general-purpose computing to accelerated computing. Accelerated computing allows you to do computing at a much larger scale, for example, scientific simulations or database processing. But what that translates directly to is lower cost and lower energy consumption, CEO Jensen Huang said during Nvidia's August earnings conference call. It won't be uncommon, he continued, for someone to switch from general-purpose computing to accelerated computing and save 90% of their computing expenses. Accelerators like GPUs, a market that Nvidia controls, enable accelerated computation. According to reports, it held 98% of the market for data center GPUs the previous year. Given that competitors like AMD are far behind Nvidia in terms of data center sales, this is not surprising. The company's earnings are anticipated to expand at a pleasant rate in the future, which can be explained by the robust growth in Nvidia's top line. With $1.30 per share at the end of the last fiscal year, Nvidia's earnings are expected to more than double this year. Its earnings could rise by 50% in the upcoming fiscal year and by 26% in fiscal 2027, according to the above graphic. Nvidia's bottom line might reach $11.93 per share if it can capitalize on the attractive addressable market that is available and achieves 15% annual earnings growth over the next 10 years. The stock is currently selling below the company's 5-year average forward earnings multiple of 41 at 32 times projected earnings. Given the anticipated earnings of $11.93 per share, Nvidia's stock price might reach $489 per share if the market chooses to reward it with a larger multiple, and it trades at 41 times earnings after 10 years. It doesn't appear impossible to reach that level, which would represent a 254% rise from current levels. Therefore, since it still has the potential to increase their wealth, investors may want to purchase Nvidia stock to retain for the long term. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video. Even while Nvidia presently controls a large portion of the AI chip market, competitors like Intel and Advanced Micro Devices are becoming more and more formidable. Additionally, Nvidia has faced difficulties in the Chinese market due to export limitations and geopolitical concerns, which may have an effect on sales of some high-performance devices. Despite these challenges, most analysts think that Nvidia will be able to hold on to its market-leading position for the foreseeable future thanks to its technological advantage and robust software and developer tool ecosystem. Analysts generally agree that the ongoing spread of AI applications across a range of industries will continue to boost Nvidia's long-term growth potential. Revenue for fiscal year 2026 is expected to be between $186 billion and $225 billion, with predictions for earnings per share ranging from $4.15 to $5.10. According to these projections, the need for AI processing power is expected to continue growing at an exponential rate, and Nvidia is well positioned to benefit from this trend because to its state-of-the-art hardware and software. For Nvidia, the potential magnitude of the AI computing market is a huge opportunity. The need for specialist AI hardware is predicted to increase rapidly as companies in a variety of industries use AI technologies more and more for activities like autonomous systems and natural language processing. Within the next 10 years, the global market for AI chips is expected to grow to hundreds of billions of dollars yearly, According to some estimates, as the industry leader at the moment, Nvidia is in a strong position to benefit greatly from this expansion. The company is a desirable partner for companies wishing to use AI on a large scale because of its end-to-end solutions, which include both software and hardware. Additionally, future applications like AI-powered robotics in warehousing and manufacturing may create completely new markets for Nvidia's technology, opening up even more opportunities for long-term expansion. In order to sustain its dominant position in the AI chip industry, Nvidia has a major edge thanks to its sustained investment in R&D, robust software tool ecosystem, and developer support. Significant performance gains over current generation products are anticipated from the company's future Blackwell architecture, which might cause Nvidia to fall farther behind its rivals. Due to this technological advantage and Nvidia's existing connections with large cloud providers and businesses, clients find switching to be expensive, which makes it challenging for competitors to capture a sizable portion of the market. Furthermore, Nvidia has a strong value proposition that goes beyond just hardware performance thanks to its NVDA software platform and vast library of optimized AI algorithms. Even as competition heats up, Nvidia may be able to maintain its market dominance with its all-encompassing strategy to AI acceleration. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.